Hello everyone, welcome to my channel Sujit Patra, Ekdam Real Estates. So as you know, in my channel, I cover generally all topics about real estates only. So all my earlier videos relates to the real estates and real estate industry only, and it mostly for the interest of the flat buyers. But I have received many inquiries to cover a specific video on the income tax side. So after the Union budget passed by the finance minister on 1st February 2023, so I've received many of the queries from my viewers and subscribers to prepare a videos on the income tax in the Indian budget 2023. So looking into the interest and the request received from my viewers and subscribers, so I have presenting this uh, videos on income tax. So there are many queries arises on the income tax side when the budget has passed on 1st February. So in the budget actually there is a new tax regime has been passed. So what is the new tax regime? So it is not a new tax regime. New tax regime has been passed in earlier years also. So it is the new and revised tax regime, but the old tax regime is also prevails. So the taxpayers can file income tax return in the old tax regime as well as in the new tax regimes. But always there is a confusion which one to choose, which is better, how to select this old tax regime and new tax regime, and what are the options under old tax regime and under new tax regimes. So there are many confusions, and many of the taxpayers get confused also. So to clarify all the points, so I have presented this video on income tax side. Hope everybody will like this, and if you have any queries or inquiries, please do write on the comment sections. So basically, what are the changes in the new tax regimes for the financial year 2023 and 24? It will be effective from 1st April 2023. So the major changes introduced is it will be a default options unless and until the employee chooses old tax regime or new tax regime. The employer will choose it as a default option. So every employee has to give a option to their employer whether they have to file under old tax regime or under the new tax regime. So it is a default option by the employer, and the basic exemption limit is increased from 2.5 lakhs to 3 lakhs. And here also there is an introduction of standard deductions, that in for the first time in the new tax regime the standard deduction of 50,000 has been introduced for salaried and pensioners. And under 87A of Income Tax Act, the taxable limit has been increased to 7 lakhs. So that means the person having a income of 7 lakhs and standard deduction of 50,000. That means if a person is earning a salary income of 7 lakh 50,000, then they need not pay any income tax. Similarly, it is applicable for the pensioner also. If they are drawing uh, total pensions of 7 lakhs 50,000, they need not pay any income tax also. And other is that deduction has been allowed under section CCD 2 if any employer is giving any pension for the employer, then that under section 80 CCD 2 employer contribution towards the employee's pension account is also treated as a deduction allowed. And what other deduction allowed is that section 24, that means the interest paid on the housing loan let out up to the rental income receipts. Earlier, actually, in the old regime, the whatever the income, interest payable up to 2 lakhs, so that has been deducted. If any home loan buyers paid any interest, and if that interest amount is up to 2 lakhs, then the entire 2 lakhs is deductible from the total income if it is self-occupied. But here under new tax regime, the interest paid on the housing loan, but if it is let out, it is restricted to the rental income receipt. But there are many deductions which are not allowed, but which are very common also, like our section 80C. Under section 80C, it is a very popular section, like your PF, provident fund account, then your insurance premium, then your all other investment also, NSEs, then HRA also, house rent allowance, then LTC, leave travel concession, and home loan interest under section 24 if it is self-occupied. These are very common deduction. These are very popular deduction, but these are not allowed under new tax regimes. So now we'll see the difference between the old tax regime and the new tax regimes. What the difference it is, what are the merits and demerits under both. What are the advantages under new tax regimes? It instills a saving culture because it is a compulsion. The taxpayer to avail any benefit under old tax regimes, so they have to invest, and it will be a investment options, but it is under compulsion, and definitely so it will install a saving culture. Similarly, under new tax regimes, this invest money without any preconceived limitation. You can invest, but there is no limitations. So the government has made the investment, it is a freedom to the taxpayer. They can invest on their own way. But there is the numerous tax slabs help the taxpayers. The tax slabs have, there are 6 tax slabs under new tax regime. So this numerous tax slabs helps the taxpayers. But looking to the limitation side or the disadvantage side, under old tax regime, investment lock-in period hurts liquidity. So if you are investing towards any of the investment instrument, so definitely it will attract your liquidity. And then the limited number of tax saving instruments, you don't have any choice under the declared source of tax saving instrument only. There only you have to make investments. And other limitation under old tax regime, evidence retention of deductions claim is a hassle. So there are many deductions, like there are 70 types of deductions allowed under old tax regimes, and to claim under different sections under old tax regimes, it is a very corpulent tax and it is a very hassle also, and it requires little bit knowledge and expertise also. And under new tax regimes with no exemption, total taxable income will be larger. So if you see the tax slabs under old tax regimes as well as the new but revised tax regimes, so what are the basic difference? So the taxable slabs has been changed as well as the tax rate has also been changed. So that means under old tax regimes up to 2 lakhs it was nil, but under new tax regime, the up to 3 lakhs it is nil. Earlier also under old tax it is from 2.5 lakhs to 5 lakhs it was 5%, but now under new tax regime from 3 lakh to 6 lakh it is 5%. That means there is a change in the tax slab. Under old tax slab from 5 lakhs to 10 lakhs it is 20%, and from above 10 lakhs it is 30%. But here now from 6 lakhs to 9 lakhs it is 10%. From again from 9 lakhs to 12% is 15%. So from 12 lakhs to 15 lakhs it is 20%, and above 15 lakhs it is 30%. So there is a changes in the tax slabs as well as the tax rate also. So there is changes in the tax slabs as well as the tax rate, and it has affected the tax buyer also. If you see the scenario 1, without any deductions, without any exemptions, and if a person is having income of 20 lakhs, then what is the scenario under old tax regime and the new revised tax regimes? If a person, salaried persons, drawing a total income of 20 lakhs, but this example I am giving without taking into any deduction, any exemptions under old tax, because in both the scenario the standard deduction has been introduced, that is 50,000. So up to 52.5 lakhs under scenario of under old tax regime it is nil, and above to 2.5 lakhs to 5 lakhs the tax rate is 5%, the tax payable is 12,000, that means 5% upon 2.5 lakhs, and the next slab is 5 lakhs to 10 lakhs it is 20%, so the tax payable is 1 lakh, and above 10 lakhs it is tax rate is 30%, and the tax payable is 3 lakhs, that means 30% on 10 lakhs. So under old tax regime the total tax payable is 4 lakh 12,000 and 500 under old tax regime. Then what is the effect on the new tax regimes? Under new tax regimes up to 3 lakhs it is nil, 3 to 6 lakh it is 5%. So that means it attacks the tax slabs of 15,000. Then 6 to 9 lakhs it is 30,000, that means 10% on 3 lakhs, and 9 to 12 lakhs also it is the tax rate is 15% and the tax payable is 45,000, and income of 12 to 15 lakhs the tax rate is 20% and the tax payable is 60,000, that means 20% upon 3 lakhs, and income above 15 lakhs the tax rate is 30%. So the total tax payable under new tax regime is 3 lakhs. Sir, for Mukesh it is 15 lakhs income. Under old tax regimes it is tax payable is 1 lakh 4,000, but under new tax regimes it is 1 lakh 40,000. So if the income goes up, the tax liability is also increases under new tax regime, and under old tax regime it is less. That means here it is 1 lakh 4,500 under old tax regime, and under new tax regime it is 1 lakh 40. Similarly, for Nandini also we have considered tax in salary income of 20 lakhs, and the under old tax regime the tax on income, that is the tax payable, is coming 2,50,500, but under new tax regime it is coming 2,85,000. So these are the hypothetical scenario we have calculated looking into the salary, fixed salary, that is 10 lakhs, 15 lakhs and 20 lakhs, having different scenario, different deductions and exemptions. So under conclusion sides, so we have considered the old tax regime calculation and the new tax regime calculations. So what is the takeaway? So takeaway is, if the yearly income is on the higher side, so always it is a safer bet to choose the old tax regime as compared to the new one, because that also we have seen the calculation and the comparison sheet with the old tax regime, but the investment opportunities for the taxpayer are high due to the variation of deduction and exemptions like PPF, ELSS and mediclaims. So under old tax regime, investment opportunity of a taxpayer is high because they are under compulsion and they are investing under different tax saving instruments. And but in the new tax regime, it is tailored to the new investors and individuals, those who are starting their career, those who are beginners, and their income just recently started. So we have seen that under new tax regimes, it is suitable for the beginners or the persons, individuals who are starting their job career. But the only way to determine old and new tax regime which is better for you is to enter the income in both the tax regime and calculate it under in a Excel sheet if it is possible. So you calculate on the old tax regime and the new tax regimes and which one suits you. But whether it is old tax regime or new tax regime, it all depends your financial goals and your family's future also, because sometimes depending upon our financial goals and the family's needs, we may not be able to invest in the under old tax regimes. So we have to go for new tax regimes. So it all depends the financial goals and the family needs. So this all we have discussed about the old tax regime and new tax regimes passed in the union budget. So hope that you have liked my different video on income tax, and if you have liked my video, please do your comments on the comment section and like, share also. And if you have considered and for a good video, then please subscribe my channel, and hope you have liked my video, and thank you.